Good afternoon, guys. Welcome to this live. I'll be covering our weekly analysis. I know I'm quite late today, as in we're used to getting analysis, weekly analysis for various trading components on Sunday. So I'm quite late, but you don't worry because today the markets are quite slow. It's a go slow Monday, so you don't have to worry. We don't have news today, so I'll just jump right into it. So eh, news just coming in from the UK that Labour Party MP Catherine West was going to challenge the candidates of Keir Starmer as a PM. That's news from the UK. You can notice that today we don't have red folder news. We only have orange folder news from China to CPI, the year-on-year CPI in China, and most of the times you don't get people who trade such currencies. The Chinese yuan is a minor asset to trade. Iran says it will never bow as Trump rejects peace counter offer prolonging Middle East. Okay, so Iran and the US and Trump are at it again, and we expect on Friday. Is it Friday or Thursday? It's on Friday. We expect that Trump and Iran finalize on their ceasefire talks. So let's wait and see how this one roll down again. So today, as I said, we don't have major news. There's only a tentative orange folder news that Cleveland Fed inflation expectations. That's tentative any time, any day. So the previous was 3.1. This is not news to worry anyone about. So let's go jump into tomorrow. So tomorrow, that will be Tuesday, 3:30 East African time. We are anticipating to have CPI news from the US, and that tentatively we also expect a nomination vote for to endorse Walsh as there's Kevin Walsh as the nominated chair for the Federal Reserve that will be taking over from his term will be running for 4 years from this is May 2026 to May 2030. Or he will be taking over from Powell. So it's expected to pass. The vote is expected to pass. So there will be 60 voters from those are the board of the constitutes the Federal Bank or the Federal Reserve. Sorry, and it's expected that they Kevin Walsh actually succeeds Jerome Powell. That's tomorrow. So this is the biggest news for the week, and it's tomorrow. Last Friday we had FOMC, and this week we are having CPI. That's tomorrow. Um, then you also have that's Wednesday. Wednesday we have PPI news. That's also a red folder news. At the same time, 3:30. And in Australia on Wednesday we'll be having a wage price index, a quarterly wage price index. Um, Thursday we have news from the UK, GDP monthly, and at 3:30 we'll be expecting a retail sales news or from the US. So this is a quite a busy week. On May 15th, we don't have any red folder news. That will be the last day of the week. But we also expect this day to be quite busy because Trump and the Iran, I think they have some report to give out on Friday. That's May 15th. So rolling back to tomorrow, the CPI day. So summarily, in short, um, we are going to have high impact news tomorrow from tomorrow onwards to Friday because geopolitically on Friday we'll be having the Iran and the US nuclear talks, and that's quite huge. Uh, though it's not included in the in the economic calendar, but I think I have been watching some. Is it Iran, Al Jazeera, and there are talks that are being held on Friday. So tomorrow we are going to have the Eurozone CPI month on month, and that's quite high impact on. We're also going to have CPI news, the headline and core in the US. On Wednesday, we are going to have two red folder news, the US PPI and the ECB President Lagarde will be giving a speech the same day. Thursday, we have three red folder news in the UK, two in the US. The US will be releasing initial job claims and the US retail sales, and the UK will be releasing quarterly and yearly GDP data. Then Friday sums it up with geopolitical news about the Iran and US nuclear talks. So from that list of what we expect from the markets this week, we really are going to have a high volatility week, and it will be back to back. So for traders, this is quite a good week that presents opportunities for you guys to trade. Yes, traders who have been in the game for for some time. This is a huge it's a huge week to trade. The opportunities, though risky, but risky is the price of the game. This is the price of the game. For the news again. So I get my news, my calendar, my economic calendar. I use Forex Factory. I don't use the other ones because Forex Forex Factory is the standard uh, website for economic data. You can use other sources, but everyone has a preference. So they give the same results. So it's nothing. It's not that bragging or something or I'm rude. No, you can use any other websites. So let's dive into these individual events and we see what's going to happen or what we anticipate to happen. So currently, the Federal Reserve currently holds the rates at a corridor rate basis of between 3.5 to 3.75%. Uh, with most market participants pricing the probability that there is not going to be change in these rates, while on the other hand, the Federal Reserve is in data dependent holding pattern where uh, this week's CPI and retail sales figures will be decisive and they will determine whether the market's participants shift their probability to no change in the rates as earlier held in June uh, this month, especially considering the fact that they'll also be voting for the nomination of Walsh as the new chair. So in the UK, we noticed that the Bank of England left the rates unchanged at 3.75. That's in April, and it had already cut the basis points since August in 2024. That's about 150 basis points since then, while the CPI in the UK still stands at 3.3 year on year that's in March, and it was actually up. It has increased from February. It was at 3.0. Yeah. So uh, this release in Thursday this week, it will have a critical pointer. It will be a critical pointer where to determine where if the Bank of England will actually have to cut the rates again, to cut the rates after it had initially uh, increased them. All over Europe, inflation is predicted to go like at 3 or 2.9% year on year, with the ECB carefully managing rate cut expectation for the second half of this year. This is 2026. So the ECB President Lagarde speech this Wednesday is a scrutiny speech that will help investors shift the communication tone from the ECB. Currently, we see that gold is trading near in between 4,700 and 41, that range. And this is because of the buoyancy that has been provided by the central bank and the World Gold Council for the first quarter of 2026, that has significantly driven, uh, that has also been significantly driven by the crisis that was started between the US Israel fighting Iran. So the first major rainfall event will be coming in tomorrow. So yeah, it will be coming in tomorrow, and it will begin in the first major event will be starting. That's is it Tuesday? It will be starting in the European in the Europe in the morning. where we expect to see a consumer price index data for April. So the ECB in the in Europe has been carefully managing market expectations around the pace of rate cuts. So it has not been so fast at cutting interest rates, and this print of this information or interest rate information that is coming in tomorrow, if it comes above the consensus of 2.9 basis points, then it will dramatically complicate the narrative around uh, the ECB further in easing these rates in the second quarter of 2026. And the co-inflation component will be equally critical, and traders should be watching specifically for service inflation, which happens across Europe. So in a nutshell, if CPI rates come above 2.9%, then the Euro USD could surge aggressively. It will go up towards 1.1800 and the resistance of 1.1850. And hot inflation news always narrows the window for ECB cuts, which supports the euro. And so people should be watching out for a breakout in the euro USD above 1.800. So let me pull out my just a minute, my chart. Oh guys, by the way, you need to create your accounts with Empire FX. Just created mine and I want to use their charts to break down this week. Euro USD, so the scheme should be color on white, background should be white, foreground should be black. Bull candle, that's the candle going up, should be green. Bear candle should be black. Bar up should be green, bar down should be black. Ask should be blue, bid should be red. Oh no, B should be green. No, red. B should be blue. Ask should be red. Okay. Save template. I don't think I can pull out my. Okay. No problem is sharing. The problem is that I'm currently in a trade and let me disconnect my account from trading. So let me share this tab. Zero USD. So currently we are looking at Euro USD and the expectations that are to come out this week. So you can notice that Euro USD is kind of trading in between this range. This is the range that Euro USD has been trading in for the that's since Wednesday last week. And anticipating positive news from ECB, then we are looking at prices purging out from this zone upwards, and also we can also expect that if ECB rates come in bearish, then prices will come out of this range. Let me see if we have a bigger range. So this is quite it. So you see, you can notice that prices are actually rotating around this range here, forming inverted head and shoulder here. So all you can do as a trader is to wait, be patient, and you'll see you'll get a signal later on. Also, so yeah, we were saying that if CPI goes below two, is released this week, that's tomorrow, and that's in the eurozone, and it is below 2.9%, then the euro USD risks sharp reversal towards 1.16. It risks going down below to 1.16. That's if the ECB rate releases comes in. It misses Lagarde is the president for the ECB, misses the target of 2.90%. Then this is the scenario, the bearish scenario that we are looking into. Then the same day, that's tomorrow, we are going to have a significant release in the US, and the US dollar, that's the greenback, commands a lot of things in the market. So this is the most important data release for this week, and it's arguably the most important macro print globally this May. This May. So the US consumer price index for April launching tomorrow. That's at 3:30 Kenyan time and 12:30 UTC. That's the time in the US, New York, to be more specifically. So the consensus currently is that there is the reading of 3.7 year on year and the core CPI at 2.7. So the headline CPI 3.7 is well above the Fed's 2.0 per target and represents one of the most persistent inflation challenges the Federal Reserve has faced in this cycle. And this also informs the idea for Trump, who is so much into rate cutting and is even gone ahead to nominate Kevin Walsh to take over from Jerome Powell. And the voting, as I said, will be taking on, it will be happening tomorrow after the rate cuts have been released. So these numbers that I've just quoted will be the primary driver of the dollar direction for the remainder of the week, and this will cascade across every other asset that anyone is going to trade. So the tariff environment introduced by Trump administration in 2025 created what many people describe as a transition and supply side price shock. So tomorrow we'll be expecting that markets will be asking, is that shock fading or the inflation becoming entrenched above 3%? So the answer is this Tuesday will the release on tomorrow. Okay, this Tuesday will define the risk sentiment for the other times that are going to come. So actually tomorrow this is going to be a big day for traders. So in a bullish scenario where CPI data is coming will come below 3.0, that's a soft print. Uh, we expect that um, any currency paired against the dollar, it will rally upwards. So the Euro USD, GBP, USD, JPY, USD. Notice that I'm putting the USD is not the base currency in in this case. So Swiss franc USD, Canadian dollar USD, they will rally in case the CPI comes in below 3.5. And inversely, if you change the uh, ticker symbol to include that the USD is the base currency, then you expect that there will be a decline in the dollar. So in a bullish scenario where in a bull scenario of print where the euro or where the base currency is not the dollar, we expect that there will be an intraday move of about 100 pips, and the dollar bulls will be liquidating as the rate cuts below. Rate cut bets are will be growing. In a bear scenario where the CPI is going to come out above 3.9, then the dollar in the same case where the euro, the Japanese yen, the Swiss franc are paired against the USD, then they will be they'll fall. They'll fall because there will be a sell off towards the downside of the pair. So in the case of a US, the dollar against the Japanese yen, USD JPY, let me use your wonder. So on a higher time frame, let's say 4 hour time frame, let me go on a day. Let me get the daily time frame. So this is gold. No, this is the USD JP. What has been trading? We had a sell off. That's Thursday last week, a massive sell off, and we are waiting this week to have. That's tomorrow. Tomorrow will be here. We'll have our candle here. So we began the day today with a buy, and yeah. So in case so the dollar against the Japanese yen is quite a sensitive currency. It's very it's quite uniquely sensitive because the Bank of Japan has tries to accommodate the relative accommodate the stance from the Federal Reserve in the US. So hot CPI. So if CPI comes in hot, such that the Fed has hiked rates, then there will be a push. There will be a push downwards for the US for the USD JPY. So we expect that if CPI comes in hot, then there will be a push downwards, and a soft print on the other hand will be pushing prices up. So from our trading view, from this trading view, from no from the forex factory, we see that there is an anticipation. It's an anticipation for price for rates to hike from the previous. This is what analysts are anticipating. So they are not. They are not. You cannot take their word for it. So you just have to wait for tomorrow to come. Then we'll see what happens with this chart here. But as for me, I'm looking for prices for USD to be cut, so that to have to increase so that these highs are taken. Sorry for that. Back to our charts. Well, I was saying, so for me, I'll be anticipating that. Let me see. Let me go higher, even higher weekly. See what we are looking at. Yeah, as for me, I'll be anticipating that the this looks like a continuation to me, not a reversal. So I'll be anticipating that USD JPY goes lower tomorrow. That's what I'll be looking at. And in short, I'll be anticipating that CPI comes in hot. As for gold traders actually had their all-time highs this year, and it was driven by that the geopolitical uncertainty during the war and accumulation from the central bank. So in case this open chart for gold, in case CPI comes in now tomorrow, then we'll be looking at gold going higher. You see, we had gold high all-time highs in January. That's 26th January. So I think we'll be no, yeah. Go in case CPI data comes in hot, then we'll be waiting. We'll be looking at gold going high, trying to get these high highs again, because they are in case that's if the news the CPI data tomorrow comes in hot, then it means that it will be solidifying gold as a store of value to many people. So people will be buying gold in case the data comes in hot. In case the data comes in cold, that's if inflation rates come in low, then we'll be seeing gold cells trying to take this point of liquidity here. So marking it out, yeah, I think that's it. I was saying if we see just tomorrow, if this data comes in hot, so coming in hot means that the CPI data comes in favorable, there is an increase in the rates, then there will be high chances that gold buys will increase towards the upper side, uh, trying to take out these highs. Let me get this range correctly. This is our range. We are the 50%. So I'll be looking at today prices to come into this position. Then tomorrow, you for prices to come up if in case the CPI data comes in uh, high, and also if they come in low, then we'll be looking for sales to the downside. That's in gold. Wednesday, Lagarde will be issuing another speech, and the US will be also having PPI, the producer price index data. This is an upstream of measures for inflation that it feeds into future CPI readings for the next month. This is actually like an early warning system where consumer prices are heading over the next 3 or 6 months. So after tomorrow, that's Wednesday, we'll be having another release for PPI, the producer price index, which serves as a warning for the Americans over about what consumer prices are heading out in the next like between 3 to 6 months. So a higher than expected PPI will reinforce that an increase in inflation from the previous day, that's Tuesday, and it will sustain the dollar strength. So if tomorrow the CPI data comes in hot and it sustains that inflation is it signifies that inflation is rising, then there will be an increase in gold buys. So this is a gold chart. So on Wednesday, then PPI comes in, and also it reinforces that the actually in the next like 3 to 6 months, the results show the same thing, that in the next 3 to 6 months, inflation will be high. Then there will be higher increase in the buys for gold. The same will happen in the sales. So having information or data tomorrow showing that CPI is inflation is rolling down, then there will be sales, more sales in gold, more sales in gold tomorrow in case this inflation data comes in smooth or cold. There'll be sales. So after tomorrow, I'm saying we have be having the producer price index on Wednesday, same time, 3:30. So after if the price index comes out that they are cold, then there'll be a reinforcement on the next data for CPI in the next month. So we'll even go lower. We are waiting to have job claims in the US on Thursday, and we shall dive into them. And Friday we'll be looking at the US Iran ceasefire nuclear negotiations. This is quite a geopolitical wildcard. And Friday, actually, Friday, the news about Iran, the tensions and escalation and ceasefire talks. The impact is huge on gold because gold is the most direct beneficiary of the US and Iran tension escalation. And the World Gold Council reported that in the first quarter of 2026, the global gold demand actually hit a record high, and it was driven by the Middle East crisis, with bar and coin demand surging for up to 42% year on year. So if the negotiation this Friday break down and the military threats intensify from both sides, then gold could make a run up to 5,000 within the session, Friday session, and a genuine peace deal with conversely could see a sharp risk and sell off of gold towards 4,500 as the geopolitical risk premium will be deflating. So silver, on the other hand, it is a dual safe haven and an industrial nature, so it will also spike on escalation but potentially underperform gold. You see the volatility and the purchase power with the silver is quite low. So a resolution scenario will be net positive for silver, and the demand will have improved via the global trade flow. So in a nutshell, we are looking at eurozone Euro USD being impacted this week by the CPI and US news. CPI from the Euro and from Europe and the US. We're also looking at GBP USB. Is GBP USB called cable? Yeah, I think so. Uh, GBP USD will also be impacted by the events in the UK, GDP news, and the US data, inflation data tomorrow. USD JPY also be impacted this week from inflation data from the US and the war in between US Israel against Iran. USD card will also be impacted by the CPI data in the US and oil and Iran talks. The USD Swiss franc will also be impacted by CPI data and geopolitical news from Iran, the US, and the ceasefire talks. Gold, silver, S&P, all those three will be impacted by risk sentiment in inflation data. Uh, Nasdaq, that's in an index, will be impacted by CPI from the US. The UK GDP will impact FTSE 100, top 100 performing firms in the UK. DAX 40 will be impacted by the Eurozone news, Euro CPI, and speech to be given by CCB President Lagarde. Crude oil will also be impacted by negotiations in Iran and the opening of Hormuz. So before uh, this news come in, I would offer you some structural thinking into how you, as a professional trader, you should approach this week. You should cut down on your position sizes to 50% ahead of tomorrow's CPI news, because the volatility will be high, between 5 times the normal peak range during the release window, and also avoid establishing new directional bias on Sunday, because the direction an analysis of what's going to happen today this week cannot be made today before the CPI news have been released. And also widen the stops proportionally if you are a swing trader. If you are seeing a swing trader, you should at least consider widening your stops. So a normal ATR based stop will be triggered by the initial news spike. So widening it gives you a buffer and a reason to remain into a trade. And also trade the reaction of the news, not the event. So at least wait for 10 minutes at least after the news before you can trade. And also keep the geopolitical news feed open all week. Follow news events, follow news channels on YouTube, on everywhere. CNN business, whatever. So you just be stay in touch with the news and you'll be good to go. Guys, remember these an analysis prepared for educational and information purposes only, and I'm not I'm not consider whatever I'm saying does not constitute any financial advice for anyone to take trades based on them. So, and you should also know that forex exchange trading commodities, trading indices involves uh, substantial risks and loss, and uh, analyzing historical events does not indicate the results that comes from the future. So always conduct your own due diligence and consult licensed financial advisors before making any trading decisions. So that's it for today, for this week. That's what we anticipate this week. And yeah, just keep in touch. We shall see what's happening. So in a few minutes, I'll be releasing my analysis for today on my trades. I'll also be releasing review, my review for Empire FX. So someone just messed up someone's trade here. So Catherine has just this news about Catherine. Okay. Yeah. So that's it, guys. Until next time, let's meet again. Ciao.